gentlemen, every time I'm watching my favorite real estate YouTubers, whether we're talking Cardoni Baloney or Ben Mallow, they always brush by my hometown of Toronto up in the Great White North, which is actually pretty warm right now. Here in Canada, folks, they never have anything good to say about it other than don't buy real estate there. It's way too expensive. And most of the people that live in Canada don't even understand why we have some of the most expensive real estate in the world. But today, I'm going to break it all down for you and explain to you why Canadian real estate is so bloody expensive. So let's jump right into this.
Drop it.
Welcome back. Passive income investors alike to something most Canadians don't even understand. And if you're one of my US viewers, you're going to get a really cool learning lesson today. But nonetheless, we're primarily going to be focusing on Toronto in Ontario because that is where I live. But a lot of what you're about to learn, you can actually apply and learn in your own province up in Canada here, guys. But taking a look in Toronto, the average home price as of right now is 870,000 Canadian dollars. You can do the conversion yourself. In the US, that's probably around 700,000, maybe 680, give or take. And going down into the province of Ontario, where I live, the average home price is just under $600,000, which is pretty insane. And if you know anything about Toronto, a 500 square foot apartment is generally going for like 600 grand. It is some pretty staggering stuff. But let's get into the first main reason why this is so expensive. And it's something that nobody really understands. And it actually has to do with where I live. Because farms in rural communities are literally what is driving up Ontario real estate prices. And you're probably thinking to yourself, how are these small communities raising, the real estate prices? And it has everything to do with the Greenbelt. If you guys have never heard about the Greenbelt, well, essentially the Ontario government mandated that there are protected lands all throughout basically this really dense region. Because let me show you a map of Ontario, actually. If we take a look at the map of Ontario really quick here, folks, it is crazy that we live in this tiny little nichey part of this grand, massive province. We live down here, folks, all the way down in this little dot. This is what makes up most of the population in Ontario. Meanwhile, most of this is just farmland. Essentially, what this Greenbelt is protected land that mandates under a certain amount of acres you can't sever it off or build new subdivisions or communities. And as far as I can tell, from my understanding, it's 65 acres. For every 65 acres, you are allowed to sever 1 acre off living in these communities. And what ends up happening here, folks, is if you're taking a look at something like Toronto, you can see that Toronto can't go out any farther. This is where all the money is. This is where the majority of Canada's GDP growth comes from. And it's just wild to think that there's no more going out. We can only go up. And what happens when you have one of the fastest growing cities in the world that can't expand any farther, and now we're stuck to building condos? Well, naturally, you're going to see prices going up. And we're starting to see that happen all over the Greenbelt right now. I mean, home prices from Newmarket, talking about Barrie, Guelph, going all the way down to Niagara Falls and Welland. They simply cannot build out into the woodlands anymore, so they are literally stuck building and driving condos. So there's a very good sign looking forward that, yeah, there's a chance that real estate prices are just going to keep going up because of this main reason here. Now, so if you own real estate in Ontario, the one thing you're always going to want to pay attention to are these Greenbelt rules, because if they ever decide to say, heck, we're going to get rid of some of the Greenbelt so we can continue to expand out, pay attention to that if you own real estate, guys, because that is something that could also drive prices down. But I swear to you, this is one of the primary reasons that real estate is getting out of control here in the province of Ontario. Now, what is another reason real estate keeps going up is population growth. As many of you might be aware, Canada is one of the most diverse cultured places on the entire planet. It is also one of the fastest growing places in the world. Just taking a look, this is Toronto real estate, by the way, guys, the metro area. And currently we sit on roughly 6.2 million people. And we are expected to grow by 2035 up to 7 million people. And again, guys, we can't go out, so 1 million people are going to be going up. And I mean, this is the primary factor to real estate going up anywhere. It's supply and demand. It's all about location. You don't want to buy a house just because it's cheap. You want to buy a house based off growth reasons, which is why so many people like Texas. So many people, I think it's Houston, Texas is a blowing up place in the States. I mean, you could talk about Vegas right now is another really fast growing place, and Canada is no exception to that, guys. We got a lot of land, and it's really crazy that with all the land we have, we're not expanding standing out. We're just going up, and it's going to be neat to see how kind of all of this plays out. And this is another awesome reason to want to own Toronto real estate. And I can't have exposure through buying a condo or a rental unit because I am broke. I do not have, a 20% down payment on an $800,000 house. You would definitely need to come up with a stupid amount of money. Gotta have a couple $100,000 just kick in for something like that. But luckily, you can buy into Canadian REITs, which are insanely undervalued right now. As many of you know, I've been leveraging credit into things like RioCan, places that have really high exposure to Toronto real estate. If for any reason, whether it's through REITs or physical real estate or just going on back-end deals, being a silent partner, you want exposure to Toronto, guys. It's just one of the greatest cities in the world. And for these reasons, I can't foresee why it wouldn't keep going up. But another primary reason that people keep forgetting that Canadian real estate has gotten so expensive is the Canadian dollar. This matters an insane amount. A lot of people don't understand how inflation works, but currency doesn't work the same as assets, okay? You have to keep in mind that the Canadian dollar is separate from assets. So when you're looking at, say, US assets, so when I'm buying my US stocks, I now have to pay a massive premium to pick them up. But it's no different than even if you're buying real estate in your own country, because the Canadian real estate doesn't trade against the same value as the dollar. So if the dollar goes down by 25%, well, now it's going to cost 25% more for you to purchase those asset prices. We've talked about this when the Fed prints money. And this all comes back to inflation, because in very simple terms, guys, for every new dollar they print, you now have more dollars out on the market, and the more dollars that exist, the less valuable they are. It's like playing cards. Those really rare playing cards they don't make anymore because there's not a lot in circulation. They become worth more. And real estate's the exact same thing. There is only so much real estate out there, so if you own the right location, the demand can only keep going up because there's more people, but less product on the market. And unfortunately, it is a shame for anybody that doesn't own assets, because if you've owned stocks, if you own businesses, if you own real estate, if you're living in an inflationary period here, folks, where the dollar continues to drop, you are infinitely going to get richer. And to give you guys a simple example of how the conversion even works on Canadian stocks, here's my RioCan position in my one brokerage account. And we can currently see here there's a change on the dollar amount. So let's say I bought this asset when the Canadian dollar was trading at 72 cents, which if we go back and take a look, it fluctuates. People like playing the trends, but we can see it hit about 74, 72 cents. So let's say I bought my Canadian assets when the dollar was at 72 cents, and then it went up to 74. So we can see here that's actually what happened is I am down on the dollar change by about 2% because the Canadian dollar has gone up 2%. So that means I actually had to pay a premium because today those dollars are worth more than they were when I purchased this asset. The cool thing about this, though, is if the Canadian dollar continues to sink, even though I own Canadian assets, because I paid for it when the dollar was worth more, I'm actually making money on the Forex exchange, as they call it. Now, this is some really confusing stuff, but it is something that has to get calculated in to your transfer of assets, and it gets very confusing, but it's always a fine reminder about why cash is trash. If you hold cash in a bank account, it is the same thing as holding an investment, and there is just as much risk to cash as there are to, say, real estate or even talking about the stock market. As though many people would like to argue that, I'm telling you guys, if you've held just Canadian dollars with no assets, you've watched your dollar value drop by 25% over the last decade, and there is no cash flow. Cash doesn't pay dividends. Cash doesn't do what real estate does and go up in value over time. There's no supply and demand here to any major extent other than to the downside. So this is why I don't like holding cash. I only hold enough for an emergency fund, and that's all I'm going to continue to do. But these are some fine reminders of how the real estate market keeps going up. And one more thing that I would like to discuss really quick, guys, is the foreign income buyers. We've had a big problem here in Canada as the laws are fairly loose for letting people that live in Russia, China, drug money funneling into the country to buy real estate, because you only need a broker. You don't need to live here. And for foreign income buyers, they only pay a 15% tax on closing. And this law came into effect in 2016. But the crazy thing about these foreign income buyers is they're like, oh crap, well, we don't want to pay a premium to buy real estate here. That's what you would think until, again, you look at the dollar that has dropped over the last 5 years, folks. But if you live in the US or you live in China or Russia, guys, and your dollar has remained flat against the Canadian currency, you're still getting a deal, because you have to pay a 15% foreign buyer's tax, but if the dollars drop by 25%, you're still getting a 10% discount on the dollar conversion exchange. This is all the crazy convoluted stuff that comes into play that keeps driving the Canadian real estate market up. I made videos in the past talking about why Canadian real estate might crash, but these are primarily all the reasons it just keeps getting more expensive. And in light of all of this, I would love to know what you guys think in that comment section below. But stay cool, stay awesome, and I look forward to catching you tomorrow.